should be starting up in a moment. All right, let's get this going. All right, thanks guys for tuning in. Let me switch this off. Bear with me 1 second as we get started. All right, let me know if you guys can hear me in the chat. Just drop like good. Let me know if you guys can hear me, and then we'll get started in just a moment. The stream's going to be 30 seconds behind, maybe a minute behind. But let me know if you can hear me, and as soon as I get that confirmation, then I'll go ahead and start. And I'm still waiting on... All good. Okay, excellent. So I'm just going to jump right into it. It's probably be a short broadcast. I just have a few things I want to cover, and then if you guys have any questions, feel free. Charts you want me to look at, questions about the market, that's what I'm basically here for, more for the Q&A. So we'll keep things pretty short and just jump right into it. Again, the stream is a bit behind, so just bear with me on that and just keep that in mind. So let's just kick it off with the S&P 500. So the SPY this morning had this nice gap higher. We are fading a bit right now, particularly in this last 15 to 30 minutes into the gap here. So you can see us kind of falling back in here. This is a 15-minute chart as we're starting to break down. But really, I don't want to look that close at the market here. I want to look more at a daily time frame, and you can see we're still stretching up. We're still in this fast momentum breakout phase. And again, I keep reiterating the same sort of idea, is that we're breaking out from a long-term structural range that was developed over about 18 months. So it's powerful, right? When you get those initial legs higher, it's going to be a powerful, fast move. So while, yes, we are very overextended on the daily chart, I would say that's the normal right now. That's the normal condition that we might want to expect in this type of environment. Doesn't mean things can't change, but this is just what we have right now and what we've been in. So that's the way I'm sort of looking at it. Even if you put on something like the standard Bollinger Bands, 2 and 20, we're actually not outside of it. We're actually in a very healthy, bullish, sort of formation here, riding along the upper band, which is really what you want to see your strongest markets do in those trend kind of breakouts stages. So really, we're not overextended on the Bollinger Bands. They're opening up, widening. The top is expanding higher. The bottom band is expanding lower. It's perfect behavior. You want to see the volatility expansion. Now, if we look at other indicators, yes, we are clearly overextended on various other metrics. But once again, I would say that's kind of par for the course. So I'll leave it at that for the S&P 500. There's obviously no new resistance highs above us. On the downside, we can still come all the way back down to 213 and still be very healthy. That's just where the 8 period is. And on the weekly chart, there's room all the way down to 211, 212, and you could still say this is a healthy breakout in motion. So that's the way I'm looking at the S&P 500. Tough to add new long exposure here. Completely agree. But I wouldn't really want to be looking aggressively at any shorts at this point. So that's good. I'll wrap it up with the S&P there. If you have other questions, I'll continue on that. There's 3 names I want to look at, and then I'm going to just jump into some of the questions I see coming through the chat. But fire away for anybody that's just joining. Just leave a question in the chat. because that's what I want to spend the majority of this video on. I want to look at Apple real quick. I get asked about Apple a lot, so I figure this is a good time to at least pull it up because it is sort of interesting. It's performing pretty well today. I don't know if there's news behind this or not. I haven't seen much chatter on it, but 1.5% update today is pretty impressive. Now, earnings are coming up on the 26th, so that is going to sort of derail any potential trades, unless you're, trading with a 5 or 6 or 7 day time frame. But the 26th of July is when that trade comes, is when the earnings come out, and I like the move that it made today. I know it's in the middle of nowhere as far as trade location goes, but I think this type of move, generally has that feel where we could sort of float up into earnings, perhaps get up to this $100 round number or even above it, and just sort of pin to that into earnings. Again, I'm not trying to make a prediction. I'm not putting a trade on, so I don't love it that much. Weekly chart, but you can see that $93 is still holding. That's clearly a line in the sand. It's a very obvious line in the sand. I think everybody knows this and is looking at this area, but so far it is holding. The 8 and 20 still not, they're still bearishly aligned, but you can see momentum is trying to curl back up here based on that MACD. So there's, it's interesting bottoming process that's potentially happening here in Apple, but earnings, it's going to be, at the mercy of earnings, so it's going to certainly be interesting to see how that happens. But again, if it can stay above $97, I do like this as perhaps a long trade into earnings. Again, I'm not taking it because it's just not my setup, but for those that are, like those kind of trades, it seems interesting to me. So let's move on to TWLO. This is going to be, we're going to cover this one and one more. This is a trade that I'm in, that we've been in for about a week or so. This is a recent IPO. If you haven't seen it, just came public back here on the 23rd of June. So it's been trading for a few weeks now. And right out of the gate, it had this monster kind of explosive move higher. Opened, IPO'd really at $24, got all the way up to $42. So almost 100% gain, almost a double in just that first week of trading. So anytime that type of move happens, that type of excitement comes in on a stock, that gets my interest. I mean, and this is specific to IPOs. But because it was running so hot, there's not much you can really do with it. But it did experience this nice 2-3 day pullback all the way to that. I mean, I know it's the first calculation of the 8-period EMA, but you could see it just kind of came back down to sort of reality, came back down to earth, and then it had this nice explosive move higher. This was our entry bar right here. This was the reason. This is where we got involved. So it would be something like this. If you went down to a 15-minute chart, you can kind of see that's this sort of trend line here. So this was the kind of consolidation down to earth, as I would call it, and then this was the explosive day higher, breaking this trend line, breaking through consolidation. That was the sort of signal, retrace, breakout, move higher. Now that was our entry up here right around 36 and change, is where we got long this. And the next 2 days wasn't that inspiring. It actually was sort of discouraging, because if you look at 7.7 and 7.8 on the S&P 500, we were heading higher. So we were moving higher, we were trending higher, and we were actually, this stock TWLO was actually pulling back. So that was a very negative sort of divergence on those 2 days. But the setup at that time still warranted to kind of hold on there, and this is why I sort of like using wide stops, particularly on recent IPOs. If we were to crunch this down a little bit, this is what things were looking like, and you can see this was the 2 day pullback right here. You can see that sort of inverted head and shoulders kind of forming there, if you're into patterns. If not, it's just a pullback, right? That's all you'd call it. But that pullback was forming, and that eventually led to holding a support there, and we had this nice explosive move higher above 38, and we're trending higher today. So we've taken half of this off. We're still in this trade. It's in that strong momentum phase. It's a recent IPO. This is not something I'd want to, this is something that's almost a special circumstance. You want to try and hold on to these trades a little bit further, give them some room, because they can move so violently. But Twilio is one that we're in. We like it. I got half a position off right now. We're going to see if that can continue. Finally, one last one last name. I have others that we could go into, but then I'll just open it up to questions. RSX, the Russia ETF, tracks the Russian stock markets. This is another trade that we're in that we got into recently, and I want to point this out mostly as a trade idea that I still feel is pretty actionable. We are in this trade already. We've been in it since Tuesday. So RSX, if you look here, we had this nice consolidation building up throughout the month of April, May, June, and in July now. We are starting to see us emerge higher from this consolidation. And notice this is in the context now of what is starting to be an uptrend coming off of those February lows. If we zoom out to a weekly chart, you can see the more constructive base and the significance of this $17.80 level. So this is sort of what we're looking at, and this was the breakout that we were trading here. So we got involved in this, members and I got involved in this on Tuesday on this breakout bar here. We stumbled a bit, filled the gap yesterday, but now we're taking back off. This looks good. I like the setup. I like it on the weekly time frame. I like it on multiple time frames, and this is particularly interesting if you think USO is going to catch its footing here, which I have no idea, but the Russian sort of economy and ETF is very closely tracked and influenced essentially by what USO is doing. So if you believe oil can hold in here, this is probably going to give RSX a little more fuel to the upside. So this is one that we like. We're in, and I still think it's pretty actionable. The chase is arguably on, but I certainly wouldn't mind it. So I have some other names. Let's look though at what we have coming in on questions. So what do you think of the Qs not breaking out yet? I don't think much of it, honestly. On a relative basis, I get that it's, let's, and because I don't know the answer to this, let's see, what is it doing on a yearly basis? So it's flat on the year. The SPX is now up 5.7%, and the Russell, I should do, but the ETF IWM is up 6%. So yes, we do have some underperformance here on the Qs, but on a weekly time frame, you can see it's still in a holding pattern. This does make up a lot of the high growth names. We had that growth scare to come up, at the beginning of the year where everyone was panicked about growth. Now growth is starting to come more into favor. We'll see how this really ends the year. It's on a sluggish start. I agree. It's got work to do, but it is emerging from a pretty nice breakout pattern here above this 110 level. So I think as long as it can hold above 110 in the near term, that's constructive. A lot of earnings are going to play a big role in this. So we're going to have to see how, the Googles and Netflix's, Apple's, Amazon's, all that stuff. Probably not so much Apple, but you get the picture here. So I'm not reading too much into it. It's not crazy out of line in my opinion. It is underperforming. It is noticeable, but I wouldn't read too much into it. All right, so we get a question on GoPro 1060. Would it be wise to get out now while it's pulling back? Stop losses at 12. Okay, so I'm gonna be careful not to influence your trade too much. I'll give you what I think about the stock, but I don't, I want you to stick to your plan. So you're in at 1060. That's good entry, right? You're in this consolidation phase, or as this was starting to move higher, good. Stop loss is at 12 right now. I like it. You're keeping your stop loss tight at this point. Depends on your time frame and what you're looking for. One thing I'd say is check earnings, because I don't know when GoPro reports, but that's clearly going to be an influence. It ran all the way up to this kind of top end of the range here. You can see it almost got up there above $13, pulled back, and it's just high and tight right now. I like it in this little sort of mini kind of context here. Clearly, you have big resistance up here right around 1370. So it's range bound on that weekly kind of structural time frame. That would be cautious, right? This would be an opportunity to kind of sell into this area up here. And it's kind of trapped. It's heading to the top end of a range. I like the trend higher here on this daily time frame, but up here would worry me. It would concern me that this is where it's going to eventually fail. Maybe it needs the earnings catalyst to get out of it. Your stop's fine at $12. It's tight. If you want to give it more room, you certainly can. Just depends on how much you want to give back. Check earnings, but it's a good trade, and I really wouldn't touch too much else with it. Thirds on Gilead. So I haven't looked at Gilead in a little bit. All right, so it's going to depend on your time frame here. If we take off this weekly chart, we'll start here. It's in a downtrend, right? It's been in a downtrend now since mid-2015 or the start of 2015. And you're really trading something like that if you were to kind of try and encapsulate all of price. With a couple of trend lines, that's what it would look like. So that's, you know, making lower lows, lower highs in this type of pullback now. Go to a monthly chart, right? This looks great on a monthly chart. This is a great looking consolidation pattern on a monthly chart. So it's going to depend on what your time frame is, right? If you're an investor trying to get into this or trying to play this for multiple years, this is a great looking pattern. I like it, right? Daily time frame, this isn't so hot, right? It needs more time. So it depends on where you live and where you're trying to trade this. For me, daily time frame, I mean, this is the landscape. So I think you have risk all the way down to the lower end of this trend line, which is where it's been previously exhibiting support. And you know, you could rally up to $90. If to start now, what would get me more interested on this, particularly on this time frame or the longer time frames, is if it can start to break out of this pattern. So if it can start to really emerge above $90, $95, take out a prior, you know, swing high, that's when Gilead gets really interesting. For me, it looks like a headache and a lot of chop right now. Earnings could be some type of catalyst to get you out of this pattern, but that's effectively the way I'd look at it. Mostly a headache, not clean enough. There's better opportunities out there, so that's sort of what I would look at. Netflix, yes, Netflix is getting above that trend line. It is interesting. Again, this is going to be held hostage to earnings. I don't know when they report. I believe it's soon, but it is. This could be a similar type of thing like Apple, where you get some type of, you could maybe get some trade into the event where you could probably get long here. With a pretty defined stop below, you know, 95, or, you know, below this recent consolidation here at like 94. And if you put a stop there and tried to get a trade to, you know, $100 north of 100, basically the same price as Apple, right? As it's trading right now, they're, you know, they're almost in the same spot dollar amount. Could be interesting, but again, earnings is probably what's really going to move this out of this pattern one way or the other. So, any other questions? Hopefully that helps. I mean, there's other things that are interesting to me, but I want to keep this more short and actionable. For those of you who had just joined, we're kind of winding down, taking questions right now. If you have any questions, charts you want us to look at, take a look. Just drop it in the chat. DDD. I haven't looked at this in a while. Yeah, so I think Triple D is pretty actionable. So weekly time frame, we probably know the story here, right? Big landslide downtrend for the past couple of years. 2016 is where it finally snapped that kind of accelerating downtrend line here, right? If you were to draw, you know, I don't know, however you want to draw it, we clearly snapped it at the beginning of 2016 with this big rally from like what, $6 all the way up to 18. So we had a triple in the price. We pulled back, basically retracing 40% of that, went sideways, and now we're trying to lift higher. So yeah, I think it's pretty actionable. You know, if we go back down to the daily time frame, you can see it's emerging now from this kind of range here. So I like it. I think a trade back up to, you know, these highs over the next couple of weeks. Again, you have to check earnings, but I think this is certainly doable. I wouldn't consider this like an A+ setup just based on my style, but it has merit to it. You have a nice higher low in place now, particularly on the weekly time frame. So this is you know, a big picture kind of ABC pullback type of move here. And I like it, you know, I do like it. So I think this works. I think if you're playing this, for me, the way I would structure this trade is a real wide kind of stop loss. I would be looking at this more on the weekly time frame. And if I were to get long, you know, right now at $14.90, I'd be giving this plenty of room down to, you know, $12, $13 is my stop loss. So giving it a nice wide 3-4 point range, which is a lot for this stock. That's about a 30% stop loss, but take it and then trying to trade back up to 1860. So you can see how the risk to reward kind of works out, retest these highs. I think it's interesting. So yeah, take a look. I think that one would be pretty cool. XLF. So XLF, yeah. Actually, JPM was on my list to talk about. XLF is interesting, particularly today as JPM kind of leads us higher here. It's still in a downtrend, but it's working itself higher. It's definitely in a messy range here on the daily time frame, but structurally, even if we go to a monthly chart, you can see the clean kind of trend that this was in from 2012 all the way up here, consolidating for a couple of years. Very healthy action on those longer term charts. I know monthly is an eternity, but you can see, look at these tails all the way coming down here. So there is interest down here in a lot of the financials, despite everyone saying that they are the worst sector. They were lagging for sure, but you can see if you expand your time horizon out, they're not so ugly. But as you go down to the weekly time frame, now the daily, you can see we're right at the cusp here. Now for me, again, I would want to be trading this on those longer term time frames because it's so messy. There's so much chop in here in these moves that I would not want to try and take this on a daily time frame just because I think I'm going to get chopped out. So you have to, the way I would look at this is you got to give it a wide stop. You don't have to, if you have a strategy, you do your thing, but I would be looking at this on a weekly time frame. I'd be wanting to see this clear above 24. That's the level I've been looking at. Take out a prior swing high and now start making higher highs and higher lows, and we suddenly have a breakout in progress, and supported by the financials. That looks constructive. So that's the way I'd be looking at it. I'd be looking at it play with wider stop losses, longer term time frame, daily chart. There's just so much chop in here and previous supply in this level that I'd worried that I would just be making bad decisions throughout. So we get a lot of questions coming in, so let's try and speed this up. Gold. So this is one I routinely cover. I like gold. This again depends on your time frame. Weekly chart, I like it, right? Broke out from this this channel that it was in. Very structural move here, very large move. I like it. Is it overextended a bit? Sure, it is, but it's in a healthy uptrend, right? When you're in these type of structural moves, like especially on these weekly time frames that are moving higher, you have to assume that support's going to hold, right? You're in an uptrend. When things retrace, those are opportunities, not necessarily risks. So gold, I know everybody wants to call the top in it and fight it. I don't see it, right? There's just better things to short than gold. So I like it. How actionable is it right here? I think it's interesting. If it holds the 20 period, I like it. It's mostly held the 20 period on this recent rally all this year, basically. So this is where support's coming in. You can see it came in today again. So yeah, I sort of like it. I'd like to see it just cool down a little bit more, a couple more days of sideways, and gold's very interesting here. I'm going to move on because there's a lot. Silver as well, I like this. Similar comments, right? Extended, yes. Depends where you live. Weekly chart, you can see breaking out from very structural patterns here. Daily time frame, you can see it's overextended, but it's in that momentum phase. It's been acting well technically. Had a little bit of a scare down here, but this sort of island bottom, inverted head and shoulders led to this big move higher here. So let these moving averages catch up, maybe a little bit of a pullback, but I still like silver as well. So let's see. GoPro, we sort of already covered GoPro, and this will be recorded too, this video. So if you missed the beginning, you'll be able to go back and watch it. But GoPro, I like it. Again, you got to check earnings. We're heading back up to the top end of the range. I like it on the daily. Weekly chart though, all the way up to like 1380 or so. That's where I'd get concerned because of that big structural resistance there. LGND I've never heard of. So we got a biotech here. All right, so trending higher on multiple time frames. I like it. Monthly chart is quite interesting indeed. So monthly chart looks interesting. We're coming back close to all-time highs. Weekly chart, yeah, I mean, I like it. So daily chart, you can see we're not making, as far as biotech goes, this is holding up really well, right, compared to its index. We're not making all-time highs like the market is, but as compared to what the IBB is doing, this is in great shape. I'd worry right now that this is probably going to be a tough level for it, or I think it's just going to be a level that it's going to pause at, or you're going to gauge the supply up here around this 130 level. That's your first kind of, if you're not in it already, that's where I would be gauging this. And then I'd look for some type of base to develop and take a trade through 130. So as it pushes to new all-time high or close to all-time highs, I couldn't just buy it right here because I know this level is looming, and I know this has the potential to just go range bound in between 110 and 130 for the next couple of weeks. That's the way I'm looking at it. I like it, but doesn't seem actionable to me right now. SNE is kind of in a similar camp, right? It just as far as, well, yeah, I guess it's on the weekly chart, I'd say it's the same thing, right? Rallying back up to a prior swing high. I never like to buy right here. I'd like to see some base develop, or at least, kind of see where things stand on a weekly time frame. I'd rather be buying it over here than trying to buy anything right here. But if we go to a daily chart on SNE, you can see this is, it's messy, right? This is got to be, thinly traded? I'm not sure. I'm not familiar with this name either. A lot of chop. Like, look at this. This isn't really a clean trading market. This is tough. This is one that I'd want to give a lot of wide range of stop to, just because that daily chart looks, this looks like a difficult one. Looks like a lot of headaches here. So I like that it's above the 8 and 20. The 20 period seems to be acting as support, so dip buying seems interesting in this stock. That's probably the way I'd play it. Hopefully that helps. MON against 98.50. Go to the weekly chart. Yeah, this is one, this is interesting. I think I was looking at some of these ag plays earlier. Which I think I took a trade in MON earlier too. I was looking, I think, for this to try and hold up, or I don't know if I ended up taking it or not, but I was looking for that to hold up. It failed. So clearly we got movement today. I don't know what this is today. If you see, I like this, if we can get a close above 104, exactly where it is now, above 104, 105, yeah, I wouldn't mind, putting a stop to 100 and owning it. It's not ideal. Like, I'm not going to take this. I don't like that this whole pattern of supply and previous range is right here. But if it does show that it can hold this support here, I think it's interesting. It's interesting. I don't love it, but it's interesting. IWM. Yeah, so we talked about IWM a little bit as well. 120, that's a beast of a level. And I think it's kind of flexing its muscles right now. We're stalling at it. We're going sideways. I think this is still very healthy for sure, letting these fast-moving averages catch up, letting us kind of catch a breath here. 120 is a pretty significant level. So tough to chase it. I think the chase, the action was really Friday. If you were to buy it Friday, you could still own this clearly, take some profits at 120. You're in a half-size position. Now you just try and get you try and milk the trade above 120. But the expectation was to probably get to 120. Now that it's here, it's wait-and-see mode for me. That's the way I'm looking at it. ARLP, coal. So, yeah, we did see a little bit of a bottom come in here in coal. We did snap this very steep trend line here back at the beginning of this year, or actually really April, and I like that on the weekly chart. You get the 8 and 20 that finally have bullishly crossed over. We're making a higher low right here with this base, so I like this. I like that it's above here. We get this breakout bar. Last week was really the signal week, and we're still at those levels. So yes, I like ARLP, depending on what time frame you're looking at. I think it's I think it's actionable. This range day here, we'd want to see this try and hold this 7.6. I don't know what happened here, but basically, you can buy it today. My stop loss would be, probably $15.80. Give it some room, $16 really, and see if this can work higher. I like it. You got some momentum on the weekly time frame. I like it. Might have to steal it, but maybe not. Amazon, I covered this yesterday. Not much has changed. All-time highs. We were in this for a trade here. We bought in on Wednesday the 6th, and we just got a couple of days out of it. That was it. We're out of it now. Just a small win, quick hit. Earnings will be up soon. I like it still. See if it can catch its breath here. 740 is going to be an interesting level in the short term, and then 730 below. So just some round numbers, but weekly time frame, it's moving higher. It's in that momentum phase. The chase is on. People hate to buy it up here. So, it's definitely in play for me, and I'd like to get back into it. Just doesn't seem 100% too actionable right there. ASR, so weekly time frame. Yeah, I mean, ASR is just, this is, again, right, this is just one that is so messy. Look at all of this range inside. Like, this looks like a headache to try and trade. This hasn't trended very cleanly in quite some time. I mean, even in 2014 and 15, as it came up higher here, look at these insane kind of back and forth swings. Like, this looks very, very difficult to trade. So this is not one that I would want to, but if I had to, and to look at it, I like it above 160. I think it gets very interesting above 160 because this is sort of the level from, you know, really the past. It's effectively all-time highs in the stock, and it was the highs from 2015. So I like it above 160. Again, this is sort of, I guess, the theme of today's video. I like it with a wide stop, just because it's moving quite a bit. SQM, one that I'm not familiar with. It's been in an uptrend on the weekly chart for most of 2016. It's had a great move from 14 to 26. It's almost got 100%, almost a double this year. Coming into an area that I would be a little suspect of, like, you know, looking at the weekly chart, coming into all this previous supply, I don't love that, because to me, I always want to see where kind of overhead supply is going to kick in, where the stock can start going range bound type of thing. So don't love that all of that is kind of looming to the left, but on the daily chart, you're in a smooth uptrend. So you could kind of own it on this daily chart, take it for as long as it can go, but I would just be aware of what's to the left here. Check your earnings, sort of the way I'd look at it. Could I use Fibonacci retracements on CDE when it pulls back after that big run up? So let's take a look. Could you use fibs? So sure, you could use fibs. So if you look on the weekly chart, I mean, this is an aggressive mover, right? This came from $2 to start the year all the way up to 13. So it's, you know, gone up significantly. It's kind of completing. I mean, if you're a fan of some of these measured moves like this, you know, some people like to take those swing highs and project them to the next swing highs. Take a look at where it is. It's probably coming into a completed move here. If you're a fan of these types of kind of measured moves, I am. I mean, at least I look at it as a reference point. So you look at that. You look at where some of this previous, you know, supply comes in. I think it's tough to buy it here. But your question was to use fibs on it. Yeah, I mean, I think it's certainly possible. Your question, I mean, you really could go. And again, I'm not an expert on fibs. I do use them occasionally. Depending on where that comes, I'd be taking it from this swing. If you're looking at it on a weekly chart, you could arguably take it down from here. For me, on the weekly chart, if I were to buy a retracement, it's going to be, you know, down here around $10 or so, coming into some of those fast-moving averages. But, you know, yeah, I mean, that question's broad, so it's tough. But yeah, sure, you can use fibs, but you know, you need some structural support to help you out too. That's the way I look at it. Failed breakout on Facebook? No, I wouldn't say that. I mean, it depends on where you want to look. I need to clean up some of these lines, but really on the weekly chart on Facebook, you're in an uptrend, right? Weekly chart, you're in an uptrend. It's starting to kind of slow down a bit, and I'd say you're really just kind of entering what probably is going to be some type of consolidation phase in between here. In the context of an uptrend. So, you know, did it fail to break out? I guess I don't know what level you're really referring to, but structurally, this is probably what I'm looking at in Facebook. You know, again, if it can start to clear above 120, then we're back to trend mode. But you can see Facebook's been sluggish. You know, it hasn't been just rip-roaring higher. There's been a little more sideways slowing down recently. Take a look at the MACD here on the bottom. You can see it's actually making lower lows, lower highs. So you can see MACD down here. Let me pull this up. Has been, you know, slowing down, and that's kind of obvious in the price action as well. So, you know, I think it's just doing its rest. It's had a hell of a move, so that's about that. All right, and I do have to wrap up pretty soon, actually, but let's take a few more questions. UBNT, so I'm going to go a little more rapid fire on these. Weekly chart, moving higher out of this pretty actionable base. I like that. A lot of supply in here. I don't like that, but it's starting to make higher highs and higher lows. So if it can hold, you know, say like this recent pivot down here right around 35.50, this washout, nice washout bar here, filling this gap and kind of taking out a lot of weak longs. It looks interesting. I mean, it's definitely range bound though. So on the daily chart, I mean, here's your range. You have to get above $40, make some highs above there, and that's where it gets interesting. But yeah, I could see this working. Not a very clean one, again, so I'd be careful on that. I don't know if I can pull that. I can't pull it up. Not sure if I'm going to be able to pull up Sir Gold Corp. I guess I can. Toronto. So maybe this one. ASR. Looks like it's the one trading on the Toronto Exchange. So, yeah, I mean, this is a monster base, right? I mean, this is a very, very, very large base that it's been in. I like this momentum starting to curl up. This is one where I tend to put volume on the chart, this type of setup, just to see if it is starting to show signs of, you know, accumulation in here based on up days, volume, and, you know, etc. The kind of standard analysis. I like this. Yeah, I do. It's a pretty powerful base. I don't trade stocks at this price level, but if I did, this would be pretty interesting to me, especially with this nice move higher. It's holding higher. I like it. I'd go with it. If this were, you know, a $20 stock, $30 stock, I'd do it. 350 and above, that'd be the signal. And then you could put a stop down here around 320 or so. I really like that one. Yeah. Yeah, I only use technical analysis pretty much. I'm a swing trader. I'm active. I'm only looking to hold things for 3 days, 5 days, a week, a month. I mean, I do have some things that I'll hold for, you know, a month or two, but really nothing that warrants fundamentals. Now I wear an investor hat too, where I'll own stocks in a different portfolio. Then I care about fundamentals. But for swing basis, momentum, I'm just trying to capture swings. That's what we do, and it's been a great past 6 weeks for this, because we've a lot of trades that we've got into, momentum's working right now. It's in favor, right? So this is our time to shine, and I think members have been doing pretty well. I've been doing pretty well. So June's been a good month so far, or July's been a good month. End of June, basically right after Brexit, has been good. So yeah, I don't really look at fundamentals. They're important for the long term. And with that, I need to go. So thanks everybody for tuning in. This is going to be recorded, published, so you can look back over all of this. And if you're interested, I'm going to do these. I've been doing these once a week, pretty much, mostly Q&A style, and intraday. Just kind of jump on here, look at what you guys want to talk about. So subscribe to the channel if you're not subscribed, because that'll keep you up to date. And I hope that helps. Any questions, you guys can get a hold of me on my site, traderisk.com. What daily closing is a breakout and what weekly? So yeah, real quick on the IWM, and then I'm gonna run. I don't, and I'm gonna just I'm gonna give you just as this last thought, right? For breakouts, I really like to operate kind of in the gray. I don't like specific levels. I don't like to be exact. So I don't like to say, okay, as long as it's above, exactly 120, I'm bullish. Like it's always an area. It's always a kind of a crayon that I draw my trend lines with. That's the way I like to think about it. So just keep that in mind. As far as the IWM on a daily, what is a breakout? What is a weekly? Again, yeah, it's a tough question. 120 is it going to be a level? Is it an actionable level? I don't know, right? If we made a close above 120 this week, does it mean all systems go? I couldn't start buying just because it broke above 120. This pattern's not actionable enough. So there's a lot to that question. If you want to hear more on it, drop me an email and I'll explain it, or maybe I'll do another video on it. But just be careful on that. 120 is certainly the area that I'd be watching. So thank you so much, guys, for tuning in. I hope this helped. Have a great trading week, and feel free to ping me if you have any questions.